Good morning, traders. Let's take a look at today's market. So, starting with the US dollar index, the dollar hovered below the 98 level on Wednesday as pressure builds for the Federal Reserve to cut rates in September. Weakness stems from disappointing US employment revision, which show the economy may have added 911,000 fewer jobs than previously thought. That points to a softer labor market and reinforced the idea that the Fed could cut by 25 basis points next week, with some traders even bracing for a larger half-point move. And the markets are now pricing in about 66 basis points of easing this year. And technically, the index touched a 1.5 month low at 97.25 before rebounding. The 98 level and the 34-day moving average at 98.27 remain the key ceilings. The RSI is sitting around 45 to 47, showing indecision. If the index slips under 97.25 or even the 97 round number, the momentum could accelerate towards the 3-year low at 96.38. A break of that would expose the 96 handle. And on the flip side, a recovery above 98.27 could shift focus back to the 100-day moving average near 98.64. Next, I'm moving to WTI crude oil. The crude oil extended its rally for a third straight session, trading around $63 a barrel. The gains are being fueled by renewed tensions in the Middle East. Israel confirmed it struck a Hamas leader in Doha and also signaled potential strikes on Gaza City. These developments have shifted geopolitical risk premiums, offsetting a modest OPEC production increase for October. But still, the rally looks more geopolitical than fundamental. Looking ahead, the inventories and OPEC policy remain the more durable drivers. And on the chart, immediate support sits near $62 and 61.6. The resistance comes in at a 20-day moving average around 63.2 to 63.24. Then the 100-day average at 64.12. And of course, the 65 psychological mark. A break below 62 would shift the focus back to 61.6 and potentially $60. Turning to spot gold, the gold prices remained firm on Wednesday, consolidating around 36.50 an ounce after rebounding from lows near 36.19. Safe haven demand is keeping the metal supported as the dollar softens and expectations for Fed cuts grow. Reports of Israeli strikes and Poland shooting down a suspected Russian drone also added to safe haven flows. And technically, gold is flashing strong momentum signals, even though indicators are stretched. It briefly broke above the upper Bollinger Band at 36.74, suggesting trend acceleration. Key support lies at 36.19, then the 3600 round number, and deeper down at the 99-day moving average near 35.61. Resistance is clustered around 3674 to 3675. A clean break there would test the 3700 as psychological barrier, though the upside looks limited in the near term. And finally, the Aussie dollar climbed above 66 cents, which is its highest in nearly 7 weeks. Rising gold, oil, and iron ore prices are lifting Australia's terms of trade, giving the currency a strong tailwind. And markets see an 86% chance of an RBA cut in November, but expect no change at September's meeting. And from a technical view, Australian dollar is trading within an ascending channel with strong momentum. The RSI is above 62. A first resistance is at 0.6625. Then the 10-month high followed by the channel top at 0.6640. A break there opens the way to 0.6680. And on the downside, support is at the 9-day moving average and channel base near 0.6555. A decisive drop under that will be weaken the bullish setup and bring a 0.65 into play. So that wraps up today's morning analysis. I keep an eye on upcoming US inflation data and the Middle East headlines because both could drive volatility. Trade safe, and I will see you in the next update.